Karen Roth from RE/MAX Integrity Leaders. Thank you so much for joining me. Today we're going to discuss how you go about buying your first home. If you're looking to purchase your first home and you live on Long Island, join me as we explore what's involved in making that purchase. The process differs from state to state, so we're going to be specific to Long Island. Since it's an involved process, we're going to break this up into several different videos. Today we're going to explore the top 3 things that you should know to prepare for purchasing a home. Tip 1. Be prepared financially. Typically, you want a credit score of at least 640 in order to purchase a home. You'll be paying a lot more if you don't have that credit score. If you need to repair your credit, check out the link below for my video on how to repair your credit. How much money do you need down? For a conventional loan, you can go as little as 3% down, 3.5% for an FHA loan. That's just for the loan. You will also need closing costs. They usually run between 5 and 6% of the sale price. In that, you're going to be paying your bank fees, your title insurance, your title closer fees, your attorney fees, and they'll also be taking out your taxes to put into an escrow account. So there is a surplus there. Usually between 6 and 8 months of taxes are prepaid, plus your homeowner's insurance. Now there are VA loans that say 0 money down, but a seller is going to want some skin in the game to take their house off the market to go into contract. You also want to make sure that you're going to have enough money put aside in case something breaks in the house. You have to make sure that you have a little bit of excess put aside. Tip number 2, pick your realtor. It's important to pick a realtor that you have faith in. This is going to be your largest purchase, so you want to have someone who has your best interest at heart. In New York, we have something called agency. So an agent does not automatically work for the buyer just because you're working with them. There is actually an agreement that should be signed upon your first meeting with any realtor, whether it be on the phone or in person. They should discuss with you agency. It's important that you know about this because you want to know who they're working for. Every agent works for the seller unless an agreement is made for them to work on your behalf. Now, that does not mean that you're coming out of pocket to pay your realtor. The seller pays the realtor, unless the seller is not offering out the commission that you've agreed to with your buyer broker. At that point, you would be coming out of pocket with the difference. You should interview your agent. Just because your friend's, cousin's, mother's friend is a realtor does not mean that you should feel indebted to use them. There's some questions you should know. Number 1, are they doing this full-time or part-time? Number 2, are they a seller's agent or a buyer's agent, or both? Some seller's agents do not work with buyers. Number 3, are they on their own or are they on a team? So if you hire someone, are you going to be working with them or one of their team members? Number 4, typically, how many buyers do they work with at a time? You don't want to be one in too many people so that they're able to dedicate the time when you're available to see a home. Number 5, do they have any testimonials to share? You can research them online and find out if they have any reviews on Google or Zillow or written letters, any type of testimonial that will make you feel comfortable working with this person. And number 6, what are their hours? There are some agents that take certain days off each week, and if those are your only days that you're available to work, then that's going to be a challenge. Tip 3, get a pre-approval, not a pre-qualification. Don't assume a pre-qualification and a pre-approval are the same thing. Being pre-qualified means that you've spoken to a lender, but you have not given them any of your documents. So perhaps maybe you had a business that you declared a loss on. If you've just told somebody everything, they haven't run your credit, they will not know everything that you need to know in terms of purchasing a home. So make sure it's someone that runs your credit, that you give your tax documents, your W-2s, recent pay stubs, and recent bank statements so that you know exactly what you can afford. Your realtor should be able to guide you to several lenders for you to interview. Discuss with them working with a bank versus a direct lender. So that's part one of setting yourself up for success in purchasing a home. I'm Karen Roth with RE/MAX Integrity Leaders. Please look for part two next week. I'll see you soon.